Are you a student loan borrower? If so, we have some news you might want to hear. Student Loan Forgiveness, a program designed to alleviate the burden of educational debt for millions of Americans, is currently under the spotlight. With the Biden administration at the helm, there's a lot of talk about potential changes that could greatly impact borrowers. In fact, one of the key points under consideration is the extension of the pause on payments, a measure introduced in response to the financial hardships exacerbated by the pandemic. Another significant discussion revolves around the possibility of canceling a portion of student loan debt. Yes, you heard it right. Canceled, as in, you don't have to pay it back. Imagine what a relief that could be. But it's not all set in stone yet. There are various factors at play here, including ongoing lawsuits and policy reviews. Stay tuned as we delve deeper into what this could mean for you. A change is on the horizon for about 2 million federal loan borrowers. Now, let's dive into what this change entails. Recently, there's been a significant shift in the management of federal student loans. FedLoan, a servicer that has been under scrutiny for various errors and misinformation, has decided to end its contract with the federal government. As a result, the loans of around 2 million borrowers are being transferred to the Missouri Higher Education Loan Authority, or MOHELA, as it's often referred to. You might be wondering, what does this transfer mean for borrowers? Well, the first point to note is that this shift does not affect the existing terms of your loan. This means the conditions, interest rates, loan discharge or forgiveness programs, and even available repayment plans will all remain consistent. Essentially, the only change is who handles your loan. Now, if you're one of these 2 million borrowers, you might be feeling a bit anxious about this transition, but fear not. You will receive notices throughout the transfer process, keeping you informed every step of the way. Additionally, your full account details should be accessible from MOHELA within 10 business days after the transfer. This quick turnaround time ensures that you have all the information you need about your loan at your fingertips. This transfer process may seem daunting, but remember, your loan terms and conditions remain the same. So sit tight, stay informed, and remember, you're not alone in this journey. In the midst of these changes, there's also an update on the Public Service Loan Forgiveness Program. This program is designed to forgive the remaining balance of federal direct loans after the borrower has made 120 qualifying payments while working full-time for a qualifying employer, typically a government or nonprofit organization. Now, significant changes are on the horizon for this program. There's an expansion in eligibility on the cards, meaning that more borrowers may qualify for this program than ever before. This is a big deal because it could mean the difference between years of additional payments and achieving financial freedom sooner. Alongside this expansion, there's also a move to simplify the criteria for the program. This could make it easier to understand whether you qualify and what you need to do to ensure your payments are counted towards your 120 needed for forgiveness. Now, let's touch on the recent temporary eligibility expansion. This expansion has already resulted in forgiveness for close to 145,000 borrowers. That's a significant number of people who've had their loans forgiven, highlighting the potential impact of this program. It's important to note that this expansion is temporary. Borrowers may need to take action soon to take advantage of this waiver. It's worth keeping an eye on updates regarding this, as the deadline could potentially be extended. In summary, the Public Service Loan Forgiveness Program is undergoing changes that could make it more accessible and straightforward. These changes may open up new opportunities for loan forgiveness, so keep an eye out for more information. While these updates bring hope, there's still some uncertainty surrounding the Student Loan Forgiveness Program. The program is currently under review by the U.S. Supreme Court, and the fate of future payments is hanging in the balance. This has raised big questions for federal student loan borrowers who are unsure of what lies ahead. The pandemic-related pause on student loan payments, which has been in place since March 2020, remains intact for now. The restart date is dependent on the Supreme Court's ruling. This has frozen borrower balances, with interest not accruing and collections on defaulted debt on hold. While it has provided some relief for borrowers, it has also cost the government $155 billion. In addition to this, there are significant changes on the horizon for the Public Service Loan Forgiveness Program. A new income-driven repayment plan is being developed, aimed at reducing monthly debt burdens and total repayment amounts. The proposed changes would cap payments at 5% of discretionary income and forgive remaining balances after 10 years of repayment. However, the rollout of these changes has caused confusion for borrowers. And with the Supreme Court hearing arguments and a decision expected by June, the uncertainty continues. the program has been challenged legally with debates over the administration's authority. The payment pause will continue until 60 days after the litigation is resolved. There's no denying that the student loan forgiveness program is in a state of flux. Borrowers, policymakers, and the public are all eagerly waiting for a resolution and hoping for a system that is fair and manageable for all. Though the future of the program is uncertain, it's important to stay informed and prepared for any outcome. The extension of the pause on federal student loan payments is not without its controversy. The Biden administration is currently facing a lawsuit over this very issue. This lawsuit, filed by the New Civil Liberties Alliance on behalf of the Mackinac Center for Public Policy, argues that the Department of Education unlawfully extended the pause on loan payments. This is the second such lawsuit, following one filed by private lender Sophie just last month. The crux of the argument is that the pause, which has been extended 8 times since March 2020, is harming nonprofit employers and reducing the incentive for borrowers to work for a nonprofit. The plaintiffs want the moratorium to end immediately, which could have serious implications for millions of student loan borrowers. On the other side of the argument, the Department of Education maintains that both the pause and a proposed debt cancellation plan are perfectly legal. They argue that these measures are crucial to assist those affected by the ongoing pandemic and to provide some much-needed relief for borrowers. The outcome of this lawsuit could potentially affect the timing of the restart of federal student loan payments. Currently, payments are set to resume 60 days after a ruling from the Supreme Court on the legality of the student loan forgiveness program. This ruling is expected in late June or early July, but the lawsuit could potentially alter this timeline. As we navigate these turbulent times, remember, knowledge is power. Stay informed, stay prepared, and remember, we're in this together.